Well, hello and a very warm welcome to Business Today TV. I am Chetan Bhutani. Well, the jewelry sector is one of the most booming sectors in India, of course, globally right now, with the gold prices at an all-time high. And of course, with the ongoing trade tussle with the United States, and of course, with global trade tensions, all eyes are on the gems and the jewelry sector. And now we have a US brand coming into India with the rich legacy from India, build a brand in US and coming back to India after a long, long time. And I'm joined by the founder and CEO, Ankur Daga, and I'm joined by Aditi Daga, the co-founder of Angara. Thank you so much, both of you, for coming to Business Today TV and speaking to us. So, $100 million plus brand and a rich family, legacy in Jaipur. Why launch abroad first and not why first in India? Now, why not do we have it in India first?
Yeah, so in many ways, this is our homecoming. We both grew up in the US. We launched in e-commerce digital first. E-commerce was growing very quickly in the US back in 2005, which is now 20 years ago. India at that time, e-commerce was extremely nascent. Now we believe it's an extremely exciting time to launch. So just to give you some context, global jewelry industry is roughly 400 billion in revenue. India and the US are the two largest markets, roughly 85 billion each. India is very exciting in the sense that it's growing 10 to 15% per year. The US is growing at roughly 4% per year, which is still pretty good, but India is booming. But within that market, the sector we're focused on, which is colored gemstones, in India is only at 2% of the market. So still very nascent, even though the audience has historically known about gemstones for decades and generations. There's astrological significance, of course, and just everybody wears such colorful clothes and jewelry is kind of second nature. So one of the very interesting things that we saw when we were coming into the market is even though they're equivalent in size, the US GDP is $30 trillion. India's GDP is 4.3 trillion, but they have the same size of jewelry market. So 2% of India's GDP is jewelry consumption, which is the highest in the world. We believe we have an edge even in this market. Out of our 400 people, 250 people are in Jaipur. So we're very familiar that way. Second is our family legacies have been out of Jaipur as well. Aditi, if you want to go into that.
Yeah, my family's been in the jewelry industry for over 300 years. And, growing up, I'd always see them have this really close relationship and customize whatever the customer wants, not what's in the jewelry showcase and pushing that. So we really wanted to find a way that we could use technology to scale that bespoke experience and bring it to the world.
All right, well, Aditi, since I'm sure you must be focusing more on towards the product aspect and fine crafting that jewelry, and of course, I'm sure Ankur will be looking towards the strategy, the financials, and all bit as well. Aditi, I want to ask you, you might be aware that the jewelry and gold is a very touchy subject for Indians, especially as far as the gold is concerned. So, and of course, it's a very crowded market, and you have tons and tons of startups already venturing into it. We already have a whole lot of Indian grown bespoke brands as well. So, what edge are you going to offer to the Indians vis-a-vis your competitors?
Well, I think one thing is choice. We offer both lab grown as well as natural gemstones in both categories, diamonds and colored gemstones, as well as we offer four different quality of natural gemstones for almost all stones. So that means we have up to 250 permutations of every SKU. And that's a choice you cannot get offline primarily and at any other retailer as well.
All right, and Ankur, if I come to you, you've been a digital first globally, and what's the strategy behind starting a physical store in India? Because the rentals, the costs of labor, I'm sure it's pretty cheap globally, but yes, ultimately you're going to bear that cost to begin with. Why not start on an e-commerce first in India and then move on to physical stores?
So we've been live on an alpha basis for the last 6 months, just dipping our toe in the market, trying to understand what the consumer wants. Our strategy in any geography we launch in, so this is our fifth geography, is to understand what the customer wants before we enter fully. So 80% of the calls that came in to our call center were about where is your store? Which to us signified that the customer really needs to see, touch, feel the product. And that's why we have our first store worldwide in Jaipur.
All right. What are the expansion plans? Because we see when you look at your financials, we see you're a pretty well, strong balance sheet company with good financial health as well. You have a roadmap to 2030 that you defined earlier. You've spoken to it about. Can you tell us how many stores are we going to see in India in the coming times?
Yeah, just to back up, so we have been around for 20 years. We reached the first 10 million in revenue in 2017. So it took us 12 years to get there. From 2017 to 2022, we 10x to 100 million. All of this without any VC funding, just internal accruals of cash flow. We expect to be $1 billion in revenue by 2030. Of that, I would anticipate India would be roughly 20 to 25%. So roughly 2,000 crores, let's call it, is our target. Our base case is 1,000 crores, which is what we've underwritten when we're thinking about it. But even in the alpha launch with minimal marketing, we've already crossed 10 crores in revenue in 6 months. And we're contribution margin positive. So we're already profitable in India, which, as you know, in the D2C space is very rare. So we're extremely bullish. And this is all without having offline retail. So as soon as we add that in, you also mentioned a lot of competition exists in the market. Yes. So there's 35 funded lab-grown startups that have gone live in the last couple of years, and there's hundreds of not professionally funded startups, but nobody's really in the gemstone space, which is where we are entering. It's a very hard space to crack because it's only 2% of the market, but it's 40 different types of gemstones in all shapes, sizes, qualities. But we believe that India is ripe for this now.
Absolutely.
That 2% will get to 20%, hopefully in a decade.
That's the goal.
All right. So, if anybody could probably answer that for you, both of you. I mean, please feel free to answer. How much bullish or how much demand are you thinking that India would accrue as far as gemstones is concerned? Is there really a scope of gemstones? Because I mean, to my knowledge, gemstones, of course, is required in basic jewelry as well. But do you think what is the scope of jewelry of gemstones in India?
So maybe I can start on that. So if you look at historically in India, so let's take the Maharaja of Jaipur, which is who invited Aditi's family to come from Delhi to Jaipur. It was all about gemstones. If you look at the Maharaja of Patiala, also gemstone heavy in terms of jewelry. The Nizam's collection is also gemstone heavy. So gemstones have been a very integral part of Indian culture for centuries. That I think that's one part of it. The second part of it is what's really needed to get from 2% to 20% is going to be around education. There's so much lack of education in the market where a lot of people are selling either glass-filled rubies or rubies that are glass or fissure-filled. And in opals, they're selling Ethiopian opals instead of Australian opals, where a lot of the product that's being sold in India is not what we would define as gem quality. And so part of the challenge for us will be to reintroduce gemstones to India in a big way, in the way that the rest of the world is consuming them, which is fine, very high quality, AGTA or GIA standard type gemstones. But I think the consumer already really understands the product much more than what we thought. So in the 6 months that we were talking about, we've already sold so much in terms of aquamarine, garnet, citrine, peridot, ruby, emerald, sapphire, without the need for a lot of education. So the market is extremely savvy, sophisticated. They know exactly what they're looking for. They also recognize that gemstones are appreciating very quickly. And as you know, India is an investment mindset for jewelry. So gemstones turns out to be the perfect product for that. So
Especially with, I think, natural diamond prices coming down 40% over the last few years. I think that, Indians always look for ways to invest. And I think colored gemstones and gold become the two natural alternatives for that.
Okay, and Aditi, if you could, help us understand what are the consumers favoring? What are women favoring when it comes to a lab-grown diamond versus a natural diamond? Because of course the value for money lies in a natural diamond, but yes, the lab-grown diamond is much more cheaper and offers the same look and size and feel to it. So, what are the global peers saying? What's the trend in America, and what are you seeing in India?
So that's a great question. From in 2018, engagement ring centers were 2% for lab-grown diamonds, and that has now become over 55% in the US. And we see that trend kind of following in India as well, where 80% of our consumers, when they need to choose between lab-grown and natural diamonds, are choosing lab-grown. So that's a 4-to-1 ratio. So I think the answer is pretty clear on that.
Okay, and Ankur, you just mentioned that this is your fifth geography, and I want to ask you what percentage of your of your revenue or your profit are you anticipating in your times to come by 2030 or by 2027, any year that you give us from India?
So India as a market is roughly 22% of global market share for jewelry. Given that we have deep expertise in India, I think as a percentage of our revenue by 2035, it will be more than 22%. Originally, when we had just thought about coming in, we were anticipating 10%, but just given the traction we're already seeing in the market and how large the market is, we're confident in that 25 to 30% range. Yeah.
Okay. And would these stores be a company-owned store completely, or a franchise model, or a hybrid model? And what all cities are you looking after Jaipur?
So 22% of our revenue comes from Bangalore. It's our single highest city. So after Jaipur, Bangalore would be the next natural adjacency. In terms of our overall expansion plan, we're probably looking at 100 stores by 2030. But where those stores open are completely driven by customer demand. Wherever our customers are shopping is kind of where we're thinking about opening them. In terms of company-owned versus franchisee, our first ones will be company-owned. We want to get the model right, both from a customer experience standpoint, an education standpoint, as well as from a store economic standpoint. So we want the highest revenue per square foot in the industry. That's what we're gunning for. But we want to understand exactly what the consumer needs. And that may differ, by the way, from Jaipur to Bangalore to Delhi and so forth. We're going to have to try a few different models out to see what the right model is for the city. And so the first set will be company owned. Thereafter, if we can find the right franchisees that share in our ethos and our mission, then we would look at a hybrid route at that point.
Okay. And we also saw, gold prices hitting record high. What's your view? Do you think the demand for gold jewelry would subsequently, because we have Akshaya Tritiya in India coming up, this is a very, auspicious festival, and of course the festive season, there are a lot of buying happens in India. What are you seeing the trend for gold prices are concerned, and is there a possible slump in demand for jewelry in times to come?
Yeah, so I'd break it down between short, medium, and long term. So we have seen a slump right now in the very short term, so last 10 days. So just by way of context, in the last 30 days, gold prices have gone up by 12 to 15%. That's parabolic, and people are expecting that to come down, so they're cautious on spend. But if we just kind of zoom backwards and look at medium and long-term macro trends, I think gold continues to rise. If you look at the last 10 years, gold has 4x'd. CAGR of 14% per year. Long-term trend, we expect that to continue. It's outperformed the Sensex, incidentally, over that same time. So the two use cases for gold historically have been, it's an inflation hedge. It outperforms inflation. And then also, it tends to be a very stable asset in an unsafe world. So it's a flight to safety. We're seeing more economic turbulence or more political turbulence, and that we do not anticipate going down anytime in the near future. So gold, I think, will continue to rise. It's also a time, by the way, where the US and China are devaluing their currencies very rapidly. So there's a flight to gold because it's an inflation hedge in both countries, and that's happening simultaneously, which is why we saw the spike from 3,000 an ounce to 3,500 an ounce. That's moderated just a little bit now. But if I were to guess, crystal ball looking at a 10-year future, there could easily be another 3x in gold from here.
3x at gold for the next 10 years, you're saying?
Yeah, I think that's historical trends that we've seen over the last 10 years. I'm just projecting out from that.
Okay, you mentioned about uneven, economic policies and inflation hedging and currency devaluation. I want to ask you, with the US India issue as far as jewelry and gemstones is concerned, in particular, what's your outlook? I mean, do Indians really charge, really undercharge to the US as far as gemstones is concerned? Is US right in imposing tariffs on gemstones in India? And of course, how's the demand pricing be as far as your procurement is concerned?
Uh, Great questions. I'm going to try to be a little bit nuanced here in the answer. So let's look first at loose gemstones and loose diamonds. So from India or from Israel or anywhere else in the world, those have been import duty free to the US. So there's been a 0% tariff historically on that. That is now at a 10%. And theoretically, if there is no negotiated agreement over 90 days, it will be a 26% tariff. Now, if I look at the diamond industry, it happens to be one where I'm talking on the wholesale/manufacturing level. It's an industry that is used to very high inventory turns, so let's say 10 to 20, 12 times a year, at low margins. Now, assuming if you have single digit margins for every turn, and assuming you have to absorb some of that tariff, some of it will be borne by the retailer that's a purchaser on the other side, some of it will be borne by the consumer, and some by the supplier. That will wipe out profits from the industry. And this happens at a pretty difficult time for the industry because it's already reeling from lab-grown diamonds and the lack of demand for natural. So it's a double whammy. So it's tricky. At the same time, as you mentioned, gold prices are an all-time high, and you're adding a 10% tariff on top of that. Um, just kind of to give you a little bit of context of what Indian export has done. So April 5th is where the first set of tariffs went into effect. Most manufacturers in Surat or Bombay have shipped 5x their normal volume before that to beat the tariffs. And luckily, these can be transported by air, so it was easy to do. So there's roughly 1 to 1.5 months of inventory already in the US that is tariff-free. Hopefully, there's a negotiated settlement pretty soon, but we're in that phase now.
Yes, did you want to say something?
No, please go ahead.
All right. So I want to ask you that very interesting conversations, regarding this. But as far as the Indian market is concerned, we have our own affordability factor, and of course, it's a very price sensitive market that you're entering into. I want to ask you about the affordability factor. What are segments would you cater to? Would you also have affordable jewelry options? Would you, be completely into bespoke? Because now we are seeing, global conglomerates also venturing into the jewelry segment. We just saw the Aditya Birla Group venturing into one, and now you also coming in here. So, what size and scale are you looking at?
So, a lot of education that we thought we would need to do, we don't need to do just because people already know a lot about aquamarines or citrine, peridot, sapphire, and so forth, which has been very exciting. On the lab grown versus natural side, this is another thing that surprised us, is on the diamond side, 80% of our revenue is coming from lab grown, 20% from natural. And we're different than most in the sense that we offer both options in the same SKU. So our objective is to educate the customer on what's possible, what's out there, and we make it clear that lab grown is not an investment piece. This is really something to enjoy and to wear. And the gold, of course, will hold value, but the diamond itself may not. And same thing with lab grown color. What we're seeing on the color side is the exact opposite. We're 4-to-1 ratio between natural and lab, leaning towards natural. And I think it's a lot to do with energy, and everybody feels the energy that comes out of natural color. Astrologers recommend it, for example, and people feel different once wearing it, and that doesn't happen necessarily with lab grown. And so we're seeing that at the same time. You had also asked about bespoke. One of the things we have been thinking about from the very beginning is, the purchase process 300 years ago in jewelry anywhere in the world was extremely bespoke. The jeweler would sit down with the customer. They would talk about what the customer is dreaming of, and then the jeweler would go source the stones, manufacture the piece over 6 months. And our objective from the beginning is, can we do this because we believe it's the right type of jewelry experience? It's deeply personal, deeply emotional, meaningful. Rather than just selling you what we have in the store, we want you to get exactly what you would like. That's again been a cornerstone of the brand from the beginning. And we manufacture every piece after it's made to order. So for example, it's 1226 here in Mumbai. If you ordered it now, the piece will be cast overnight. By the time you wake up, it would be shipping to you already. So it'll be cast, the stones will be handpicked, set, rhodiumed, polished, quality controlled, and on its way out. But it's made.
Where are you manufacturing the products?
Right now, it's in Jaipur.
It's in Jaipur. So the Jaipur is the epicenter of manufacturing for all over the world.
So all over the world, so we have a few factories. So Bangkok serves most of the US market. We have a factory in Los Angeles as well as in Jaipur. Jaipur also happens to be the gemstone capital of the world.
Right.
So a lot of, as you know, so a lot of the fine emeralds that are there, or aquamarines or tanzanite, are all cut and polished in Jaipur, and which is why we are originating out of Jaipur.
And also, how much money are you putting into India's venture now?
So it's quite interesting. We're in the 6 months, we're already profitable. So we expect to remain profitable through this expansion journey. It's very unique in D2C, as you know. So we're kind of taking it slow to make sure we get the model right, and then we will hyperscale.
As far as the product development is concerned, product development, you're setting up. Of course, you have a factory here, but product development, expansion, stores, and everything. How much investments are you putting into it?
So we're earmarking $2 million in capital to
2
get
million USD.
USD, correct.
Okay.
And then we're going to go from there. So the idea is, I think within that 2 million, we should be able to get to a very profitable path very quickly.
Okay.
We're already contribution margin positive, and I hope to continue to be so as we scale. As you mentioned, with manufacturing as well as with retail, that will require some CapEx, but we expect to recoup that CapEx pretty quickly.
All right, my last question now. Okay, any surprising trend are you seeing as far as because you come from United States, you have seen the consumer trend, the consumer preferences and sentiments out there. What interesting trend can we see in US versus India, which you would like to put it here in India and probably take the India strategy back to the US? Any interesting trend or consumer data you could share with us?
So one really interesting learning that we've had is that even though we've localized a lot of our assortment for the Indian audience over here, a lot of the pieces most of the styles that are working are actually the ones that are working globally. So the basics are actually what are working best.
All right, understood. All right, well, thank you so much, Ankur and Aditi. Wishing you all the very best with your consumers. Catching the consumers, right consumers, and of course offering them a good variety. Well, that was Ankur and Aditi from Angara talking about their India plans, the India venture, and of course how they plan to capture the Indian markets by 2035. And of course, they're already into the path of profitability. Ankur and Aditi, pleasure always to speak to you. Thank you so much.
Thank you for having us. Thank you.
If you like the video, do like, comment, share and subscribe.